This is the Inside Data Center podcast. We talk to the people who power the data center sector to give you insider info on everything happening in DC today. Here's your host, Andy Davis.
Welcome to Inside Data Center podcast. Today I'm joined by Wes Cummins, founder and CEO at Applied Digital Corporation. Good morning, Wes.
Good morning, Andy. Nice to be here.
Thanks for coming on. Really looking forward to having this conversation. As I just said to you before we started recording, been following Applied Digital for a while, and it's an interesting story. So looking forward to sharing your story with the listeners and also hearing a bit more about what your plans are for the future. Before we go into all of that, do you want to give everyone just a quick introduction of who you are and what your role is at Applied Digital?
Sure. So as you already mentioned, I'm founder, CEO of Applied Digital. We started, the company is approximately 4 years old. We started building Bitcoin data centers. We've never been a Bitcoin miner, but provided data center services for Bitcoin miners was where we started. And then we started down the path for high performance computing data centers in 2022, and we've really accelerated that build. And so I, as the CEO, I set direction and kind of do deal making for the company.
And there's been a lot of that lately, which we'll cover soon. A lot going on. I always like to hear a bit more about the guests before we go into detail and find out a bit more about your journey and your story. So, how did you first enter the world of data centers, and how did you start your career?
Yeah, so I started my career on the investment side in the investment industry, and I've been a tech investor for over 25 years now. Anywhere from research analyst to portfolio manager to running my own fund, and so I spent a lot of time, especially early in the kind of the first technology revolution of the internet. I guess there's prior ones in semiconductor and things like that. But so we started in late 90s going into 2000, saw the big boom of the internet and then the big bust that then turned into another boom. And I spent a lot of time primarily in hardware. And so it was, semiconductors, network gear, a lot of telecom equipment. So I was predominantly a hardware investor. And it's just been an interesting cycle where when the first internet part started, we were building all the infrastructure for the internet. Stock valuations obviously got way ahead of where the businesses were, but that kind of worked itself out over time. And then in the early part of the mid part of the 2000s, hardware went very much out of favor, whether it was semis or network gear or whatever it might be, and everyone was very focused on software. Software got big valuations. And then it's interesting now because we've kind of rotated back to hardware, semis, network, and now data centers are a big part of that. Fiber is a big part of that. So we're back in that as we saw that start happen. I originally started seeing it with the boom of the Bitcoin network and early in the Bitcoin days, and then that's rolled into we were diversifying into HPC. But for me, it's really just been focused on primarily tech hardware investing, and now we're in another big cycle for tech hardware. And so I've pressed in harder than just an investor at this point to really participate in this new infrastructure build for AI specifically.
Yeah, interesting. And from a cycle perspective, do you feel that that's kind of how it flows from the infrastructure world? It's like you say, we have moved in cycles previously, and we continue to do so. Is that what you would forecast to happen? And I'm not expecting a time frame on this because I know you wouldn't.
The time frame is hard, but I think things will go a little more lockstep this time. And so, there's the infrastructure hardware, and then there's going to be a lot of other hardware that goes along with this. I've been talking for, I don't know, probably 9 months or so at this point that I think, one of the big AI applications that's coming, and it's going to start to be deployed over the coming years is humanoids on robotics. And so that's another big piece of hardware, but there's a lot of software that goes along with that hardware. But it's going to be a really interesting time because you're getting into a place where the hardware writes the software. And, you train these these foundational models. We saw the new Grok model come out, was it yesterday or the day before? And, the software coding in capabilities of these models is really interesting. And so it's almost like you're going to be going lockstep with software and hardware at the same time, which will be different than the last cycle where we built out a bunch of networking. We built out long distance fiber, short distance fiber, we built out data center. And then it was all driven by CPU compute, and CPU compute was fairly mature. And so it was really what software could you write and what applications could you bring on top of CPU compute. But this time, like I said, a lot of the hardware is going to write the software. And so it's going to be a really interesting time. But I think we're early innings in the build of both of those.
Yeah, I think I agree. And I think the humanoid, we won't go into it, but that's an area which I've started looking into recently about the compute requirements as well from that whole world. The demand that is going to put on the infrastructure is unbelievable.
Absolutely.
And you mentioned it earlier that you've from the investment side, you've gone all in, I guess, this time with establishing applied digital and back in 2021. You also touched on the reasons behind, obviously, the Bitcoin element of it initially. But do you want to give a quick overview of the reasoning behind why you started it and how it's evolved over the last few years?
Yeah, so we started really down the path of building Bitcoin data centers. There was a big demand, and there's some parallels here too, Andy. So when we were building Bitcoin data centers, what was going on was there was a real shortage of the new Bitmain ASICs, and it was really hard to get your hands on, and they were trading for big numbers in the aftermarket, and people were able to sell, kind of arbitrage and buy and sell equipment. But as we went through 21, we got into 22. What happened was the supply really caught up on the ASICs, which let's call that effectively the GPU of what AI is, but this is for Bitcoin mining. And then you had warehouses full of ASICs with no data center capacity. Well, we started building data center capacity in 21, and then we caught up with a lot of that in 22 and 23. I've seen some of the same elements. Now there was an element of luck in this for sure, where we started going down the high performance computing route in 2022, pre ChatGPT, and high performance computing was really a niche market at that point. You had a handful of applications that used it. We were building much smaller scale data centers. That was our plan. We built one of them. But what happened for us is kind of we started building our HPC. We hired a new team that, had experience in high performance computing. They were people that were here. They were working for a contractor in Dallas that was building data centers for, I believe, Meta at the time. So we hired them in 22. We designed, a new style of data center. And then by the end of 22, we had a small GPU cloud business running mostly for university research. And then ChatGPT happens. The world didn't really change for us until NVIDIA introduced the H100 in March of 23. And then we were, introduced into our first cloud customers where we were running a cloud service, which was never really our intention, but it was just happened to be that's the style they want of service that they wanted. We're already running a small cloud version. So we leaned into that. And then I saw the amount of demand and where this market was going, and went back to my data center development team in the middle part of 23 and said, guys, we need to go back to building hundreds of megawatts of capacity like we did for Bitcoin facilities. And so we designed a new, updated version of our data center, much larger scale. We relied somewhat on the data center team at NVIDIA to help with that design. We used some of the team at Cray, which is part of HPE, to build the design because it was pretty new, and we wanted to future-proof this as much as we possibly could. And then we broke ground in October of 23 on this 100 megawatt, critical IT load facility, and that'll come online this year. We've made a huge amount of progress, and we have plenty of video of this facility up online for people to look at. But that's really how we've leaned into it. We saw that demand coming forward. But the parallel that I saw was it was really difficult in 2023 to get your hands on H100, and then subsequently H200, but typically on the semiconductor side, fixing wafer throughput, fixing any yield issues, fixing advanced packaging issues, that in my mind, I'm like, that's going to be a lot easier than it's going to be to get power, get permitting, get supply chain to build data centers to house these, because the data center needed to be, dramatically different than what traditional data centers have been from a power density, from a cooling perspective. And so that was really the key, kind of the light bulb moment where we really leaned in on building the AI focused data centers, the high power density data centers.
And do you think from a Bitcoin perspective, because I always say this, it was talked about in the industry. If you go back 3 or 4 years, it was kind of talked about in the corner of a room. If you mentioned Bitcoin, you were kind of, you were excluded from the conversation in the data center world. But I feel that the industry, when you switch it to HPC and AI, the industry's learned so much from organizations such as yours that have built at that scale and the speed of the developments as well. And that is now coming to the fore in the data center world when you look at the HPC and AI facilities.
Yeah, so like our experience there really helped us just in how we manage supply chain and move very quickly. We were one of the larger purchases of a lot of this electric gear. You use a lot of similar electric gear, right? Step down transformers, high voltage switch gear, those types of things. Now, what I will say, the piece that we went out and found and added to our company was experience in tier 3 style data centers, because Bitcoin facilities are wildly different than tier 3 data centers. And so, we needed to go add that capability inside of our company, which we did in 22, and then we've supplemented that since. But that's the piece that I would also point out. While there are some parallels, it's very different building tier 3 data center capacity, with 5 nines type reliability versus, Bitcoin facilities, where you're really trying on Bitcoin to build as cheaply as possible. Those ASICs are pretty resilient. You can put them in environments you could never put, GPU servers into. We actually went down the path of, hey, can we retrofit our Bitcoin facilities? Realized pretty quickly that I think that was not a good idea for us. And then we said, okay, well, let's build a lower cost, HPC, where we're trying to build for, $5 or $7 million a megawatt versus, traditional tier 3 at 10 to 13. And then we've moved on to, traditional tier 3 builds. So we kind of went through this learning curve of what we needed to do. And I think we've landed in the right place. And, time will tell if we have, but I think we really have.
Yeah, interesting. And from a development perspective, you mentioned a bit earlier, but do you want to give an overview of your current developments that are in progress or in planning?
Yeah, so we have our Ellendale, North Dakota campus. We have our 100 megawatt facility that we expect to come online this year. I think it's the largest, only facility of its kind left, that's in the market to come online this year. It's a unique design. It's a 3-story design, and really what it was designed for was around the networking requirements for the GPUs, for the NVIDIA GPUs specifically. So, when you move to these types of data centers, you kind of move away from where latency outside the data center was always the most important thing. Now you're moving into latency inside the data center. So network latency inside the data center. And then InfiniBand has certain limitations on distance. So this is built with kind of network core running through the middle, and you can, in theory, connect every GPU to every GPU inside of this for 100 megawatt critical IT load and create a massive supercomputer effectively. So it's a unique build, but that campus goes to 400 megawatts of critical IT load. And so we expect 100 megawatts this year, 150 megawatts in 26, and 150 megawatts in 27. And then we have, I think we've talked about 1.6 gigawatts of utility power outside of that at other campuses and other locations that we are marketing and hopefully we'll be building in 25, 26, and 27 as well.
Yeah, a lot of scale. And I listened to another podcast you recorded fairly recently, and you talked a lot about community as well, and the impact that your developments are having on the local community, which I think is really important when you're looking at the scale of these facilities. So do you want to just touch on that quickly?
Yeah, absolutely. This is a really unique opportunity to take leading edge technology to parts of the country that, were definitely left behind by the first, the internet tech revolution. And so you can go into rural communities, again, because that outside the data center latency is not as important. It's still important, but it's not as important for these types of workloads. What's important is getting access to large amounts of power. And so, what we do, what we've done in the past and how we've built the company is we're good at finding large amounts of low cost power And we do that by finding, for the most part, what we call stranded power. So this is power that's generated, but is oftentimes goes unused, and there's not enough infrastructure in the grid to transport it from the point of generation to the point of use. So we take the use case to the point of generation. And so this one in particular at Allendale has, roughly 2 gigawatts of wind that feed into the substation. Well, when the wind is blowing, there's not enough transmission capacity to take all of that out. And oftentimes the owners of those wind assets have to curtail the turbines because you'll run the grid, very negative pricing, and they'll run the grid down to about negative $35 a megawatt, which ends up meaning low cost power for us, but also using renewable power that typically would go unused or previously would go unused. So it happens to be that these are oftentimes especially with renewable energy assets in smaller communities, because you build wind farms in wide open spaces where the wind blows a lot and the land is cheap, and so North Dakota is a big wind producer, and they produce over 2x the amount of electricity typically that they use inside of the state. And a goal in North Dakota is for the state use that energy inside the state for their own economic growth rather than exporting it to neighboring states for them to use it for economic benefit. And so it's really kind of getting two pieces here. You bring a huge development project to a town, a small community, you revitalize some of these communities, you bring, high paying jobs versus what the typical job is in that community. And but I think this is important too. It does a lot of things. So increases tax base for them. So you got better, town, county services and education. But it brings jobs, like permanent jobs. So you have the construction jobs. We have, I think, over 500 people on site every single day. And so you get that boost to the local economy. And then you'll roll over to kind of ongoing a few hundred jobs, which it's great to have those few hundred jobs. And people love to talk about creating a lot of jobs. But it's the right amount of jobs for these size of communities. You don't want to overwhelm them and completely change the face of the community, but really just be an enhancement of job opportunity and economic benefit for the local community. And we've worked really closely hand in hand with the city of Ellendale to make sure that this is a win-win for both of us.
Yeah, and well done, because I think it's really important, and I think the industry needs to be better at telling that story, which is why I wanted to just cover it quickly, because I heard it and I think it is important that we're seen as a solution, not a problem. And sometimes we get that communication the wrong way around. You've mentioned earlier that you're kind of busy doing deals, so to speak, and you guys have raised a lot of capital recently. You've been in my weekly news update many, many times over the last 6 months. So do you want to give a quick overview of obviously the recent announcement that you've covered, but also how you intend to kind of utilize that capital, really?
Yeah, so the thing that's been great for us over the past 12 months is I would say our cost of capital has declined significantly, and we've been able to raise larger and larger amounts. And these are big projects, right? That campus for us in Ellendale will be about a $4.6 billion development, which is, when you step back and think about that, I kind of make jokes to my wife. She'll show me things. She was showing me recently that, the newest Disney park, I think in Japan, it was like the Frozen park, and come on a tour with us with a new $1.9 billion park in I don't know if it's Tokyo, but I think it was in Japan. And I tell her we're spending $4.6 billion or 4.5 in Ellendale, North Dakota. It's not going to look like that. But the scale is impressive of the investment. And so for us, raising capital is a key for what we do. And the big change happened first for us when NVIDIA invested in the company back in September of last year. And then we were able to do an attractively priced convertible debt offering, I believe right at the end of October or the first part of November, where we did $450 million in debt. And then, more recently in January, we announced a $5 billion equity commitment from Macquarie, I believe, if not the largest, one of the largest infrastructure investors in the world, also big in the data center market. So they bring more than just capital, and that's equity capital. So that $5 billion of equity capital will, in theory, unlock about $25 billion of total capital for us. And the other piece of that capital is the debt portion, where you do project finance down at the asset level that then typically will flip into like an ABS. So think of, you're building a house, you get a construction loan that flips into a mortgage, and that's effectively what we'll do here. And that'll be, roughly, 75 to 80% of the financing will be in that style of, low cost debt commitments. And then to follow on that, we saw, SMBC, which is a big lender in this market, about 10 days ago for us, we announced that $375 million with SMBC. That'll be a loan that flows into basically into the project finance for us, where they'll lead that for us as well. So, we have the capital machine, in place for what we need to get the right cost of capital and the right type of capital for us to go execute on these projects.
And is the kind of short-term goals, I guess, exactly that: execute on the projects that you've got, that you're ready, get them, do a good job on them, etc., and then see what happens after that.
Yep, that's exactly it. I've said many times, I think publicly, that the focus here is how much can we build between now and the end of 2027, right? We basically have 3 years of how much can we build. One of the big assets we have is access to a significant amount of power. These are things that we put in place years ago when it was easier to do. We've done a lot of work around supply chain, because that part is really difficult as well these days. And so we have a great supply chain in place. We have power in place. Now we have the capital element in place. And so we have really all the pieces of the puzzle to go and build this out.
No, exactly that. And I think sometimes the industry, again, gets a bit confused with what's next. It's kind of like, you do a good job of what you've got, and then,
Yes.
see where you are at that point. Brings me on to a more broader question around AI. And I posted something yesterday, kind of a bit tongue in cheek, saying that every week there seems to be an announcement about the world's largest data center, which I think everyone is deciding what is the world's largest data center every week. But AI has had a massive impact, and obviously you touched on it earlier about that transition from the Bitcoin HPC into AI, and just how it's really changed this industry. I just wanted your sort of overall view on how far you think it will go, because you hear mixed messages around what capacity do we actually need? Does anyone know? Is another question. And then you have things like DeepSeek come in that kind of throw a spanner in the works for a few weeks, and then it's gone again. So what's your overarching view on the impact AI will have on this sector?
I think we're in early innings, but I think there's going to be the speed of innovation in this market is amazing to watch, and it's accelerating. And so, it's just everything is going to be very hard to forecast. But I expect like I said, for the next 3 years, for demand to remain extraordinarily high. There's an interesting limiting factor on supply here, and it's unique in versus what you would see in other markets that get this kind of demand pop, and it's the access to power, right? And what I was talking about with the ability to go and actually get the power, get permitting, build these facilities, like there's kind of a natural limiter there right now. And so it's hard to oversupply the market on the data center front, and I think it'll remain that way for at least a few years, and like I was saying, through the end of 27. But it is a dynamic I like to point out that hasn't been, in other markets, where like if you were talking about when we had, a big uplift in cell phones, right? And that was a huge cycle for us. And you had the big cycle of the internet, where, it was really just a lot of hardware driven, where you're putting, servers in racks, and you're putting, cable modems, or it used to be DSL modems, right, out at endpoints. So this one is unique in that the power requirements are high, and it's hard to get that amount of power. And I'm sure you've read as many articles as I have about the access to power and the lack of access to power and building data centers. And you do see all of these big announcements, but you kind of have to dig under the covers a little bit, because you see announcements about 1 gigawatt or 2 gigawatts. I think you see in 5 gigawatt announcements, but like kind of over what time frame, right? And it's like ours is very clear, 400 megawatts critical IT load between now and the end of 27, right? One in 25, one in 26, one in 27. And so we try to be really clear about that, because you can make these big, announcements and statements of, aspirational goals of many gigawatts of capacity in a single location. But it's going to take a long time for that power to get there.
Yeah, I was saying to somebody yesterday, you need to keep a track on the announcement and the reality. It's kind of like someone needs to do that. I haven't got time. So if anyone's listening wants to do it, the announcements go out at, like you say, 1 gigawatt, and by within 2 years there might only be 100 megawatt, and that gigawatt might never happen. And nothing wrong with that, but obviously that's never going to be announced. So yeah, it is. You do have to read between the lines a little bit with these announcements. And on the
Have ChatGPT start tracking that for us.
Exactly, yeah. Someone's got to be able to do it. Definitely an AI job. And on the power point is you're seeing that transition of power companies move into the data center industry and data center companies move into the power industry. So there's that transition period now between the power is the key, exactly as you said. It's how do we generate that power? Where is that power? And that will formulate the strategies of many organizations.
Yeah, absolutely. So I will tell you for us, there's kind of a next leg, right? So we went out and found this stranded power, and then the other source of stranded power will be, stranded nat gas, and then put the generation in place, but we stay, we've made our mistakes in the past, and we stay pretty clearly in our lane on this. We don't want to be in the power production business. We're in the data center business, and so we want to, leave the people who do the power production, the IPPs, the utilities to go and do that. Will we work with them to facilitate that? Absolutely. But we want their business to be their business and ours to be ours. But you do see the lines getting significantly blurred at this point.
Yeah, I think, and it is a lot of that. It's blurred. It's a grey area, and I don't think there's not a lot of knowledge within it with regards to who is going to do what. It's just there's a lot of conversations, I think, in that space right now about what's the best way to move forward, and it'll be interesting to see if any do it successfully, and or whether they don't. I think we'll have to wait and see. Before I let you move on, just a couple of quick fire questions, just get your views on what's happening at the moment. What do you think the main challenges facing the sector are as we head into 2025?
I still think it's access to power, number one, and then supply chain certainty is number two. Those are the two big items for 25. I don't see the demand side of the equation being an issue for 25, as I mentioned earlier, but it's really, and then just execution at that point. So, but it's really kind of a haves and has not, if or have not, if it's on the power and the supply chain point.
Yeah, supply chain, I think has been a challenge, hasn't it, for probably the last 4 or 5 years. I think once, well, with COVID, pre-COVID, basically, you go back to those days when it was a significant challenge, but it's never ever slowed down. It's increased. I think people forecasted, once COVID's out the way, for example, we'll see it recover, and it did recover, but the demand has now caught up with the recovery, which has pushed it further ahead.
Yeah.
A couple more questions. If you could ask everyone in the data center sector to start or stop doing one thing, what would it be?
I think, and I think everyone has started doing this, but the we need, as data center developers and operators, we need to drive our PUE as low as possible for better efficiency, and just not just from a climate perspective, but just a business perspective, lower costs, because I think costs need to come down for kind of the AI infrastructure, and running more efficient data centers is one of the ways that can come down, because I think as the pricing, just like everything, right, as the pricing comes down, you're going to get broader and broader adoption of the product. And so that's one, just driving a PUE. We spend a lot of time on efficiency and driving our PUE very low. We expect our facility to operate at about a 1.15 PUE on a year-round basis in North Dakota, which I'm sure is extraordinarily low from a PUE perspective. What that does, we use less electricity to power the same IT load, and that saves our customer money, and then also just lowers costs in general. And so that's number one. And then as far as the what to stop doing, I think kind of we already touched on this. These really large aspirational announcements maybe become more harmful than beneficial, inside the industry, when you have many players announcing multi-gigawatt developments in a single location. And I think it just creates some confusion about exactly what's going on.
Yeah, definitely. Biggest is not always best, I think, is a motto for the industry at the moment, because it is I'll announce 1 gigawatt, you announce 2 gigawatt, someone else announces 3 gigawatt, and kind of flows.
Exactly.
And final question, if you could give one piece of advice to anyone looking to work in the sector, what would it be?
I think it's making sure that you're working on the future, not the past. We've been able to attract a lot of talent because we're working on what everyone views as the future. I view it as the future as well. And, it's not legacy data center builds. And so that creates a lot of excitement for people who have a ton of experience in this space. And we've been able to hire a lot of really talented people with a deep pool of knowledge that have, lived this, have designed these facilities, have operated these facilities at scale, which is, what we're looking to do as well. But definitely focus on being in, an area that is looking at the future and not the past. I think most people are. It's kind of easier to do at the moment. But that future's, I think as a company, we've been pretty good at changing along with, and we'll have to do that more in the future. But you definitely there's gonna be a lot of changes in this industry and a lot of innovation, and you're gonna have to be prepared for what's to come and not just what has happened.
Yeah, I think adapting to change is massively important in this industry, isn't it? From a career perspective, because like you say, it changes every hour sometimes.
Yes.
You do, and that's what the industry is very good at. It's very good at adapting, flexing, changing to see what's next. So yeah, great advice. Thanks for your time today. If anyone's got any questions or wants to learn anything more about Applied Digital, what's the best way to get hold of you?
You can reach through our webpage is the easiest way to find us. And we have an IR contact there that you can ask any questions to. So that's the easiest way to find us, applieddigital.com.
Yeah, we'll put it in the show notes when we release the episode. But thanks for your time, Wes. As I say, I've been a fan of Applied Digital, following from afar. So it's great to finally talk to you about your organisation and your plans. I think doing some great things, and I definitely recommend people going to look at those videos you mentioned earlier. You've got some very cool videos about your developments.
Yes, absolutely. Andy, thanks for having me. I appreciate it.